Continue with our discussion on insurance, and in this particular segment we're going to talk about the in this particular segment we're going to talk about the non-life insurance or general insurance components and some basic kinds of general insurance policies that are available, uh, and areas where that might be useful for us to kind of uh, look at it as an insurance part, right? So let's understand the non-life insurance characteristics and try and look at what kind of these exist in the market and how they could be useful to us. So the terms are largely similar in the sense that you have an insured entity here, which is the asset. In this case, the asset whose value is being insured. A lot of the times you have a car or a property that is getting insured. So this may not be on the life of someone, but it is on the asset where the insurance is happening. Sometimes it's on the health of a person as well. So usually the person or the asset who is the party who is covering himself or herself against the risk is the insured in this case, right? Term of insurance is the period during which the insurance cover will be available to the insured. So this could be annual, this could be more than annual, it could be a bigger period that is there. Usually these are shorter than the life insurance policies which are available. Premium is the same as the payment to the insurance company. This will depend upon the sum assured and the term of the policy and the kind of policy, and a lot of other things also kind of come up with this in terms of the characteristics. But usually in this case, the premium for most of the things, uh, the concept is similar, that you have to collect money from a lot of people, and then some of them will need it. But unlike life insurance, maybe in health insurance you have the similar concept that with age premiums increase. But with most other insurances, age has probably got nothing to directly do with it. So age in the sense of the asset is relevant, because obviously if there is a car which is an older car, the insurance values change. Uh, but that's because the sum assured also changes. So here the comparison changes a little bit. The life value might be the same this year and next year, but the vehicle value might be lower next year, and hence the insurance amount required might be lower next year, right? So that's something that we have to be careful about when you're looking at non-life insurance. Sum assured is the amount being insured. Once again, in the event of a problem, this is the amount you are entitled to. Just like life insurance, there could be some terms of increased sum assured value as no claim bonus, right? This is a bonus that is kind of given to you, which is called a no claim bonus. Uh, a classic example of no claim bonus would be when we discuss the vehicle insurance segment. We will try and reassess what a no claim bonus would be. And then the portion of the claim that is met by the insured entity is called deductible, right? So there is a lot of the times when you will not get the entire payment from the insurance company. Only a part of the payment is what the insurance company will give you. Rest of that has to be paid by the person who is getting insured. That's called the deductible portion, right? We're going to compare two broad policies. We're going to look at characteristics of two broad policies. One is going to be a medical slash health insurance policy, and the other is going to be a vehicle policy. And then we're going to look at some of the other common non-life insurance policies which are available, right? So let's look at the medical or health insurance policy first, which is called the Mediclaim. Very important, because in today's day and age, either the person should get covered by a medical insurance via their employer. A lot of the companies basically provide their employees with medical insurance, or they should have their own health insurance there. Why is it important? Is because you get a possibility of reimbursement of medical expenses incurred for the policy holder and identified family members covered under the policy. So typically for your spouse, which is your wife or husband, it covers, and kids get covered in this. There are some policies which cover the entire family, and there is a reimbursement of medical expenses that can happen should someone have a health insurance policy or a medical insurance policy, right? Depending on the policy terms. Expenses such as consultation fees, medicine, and treatment are covered, right? Treatment costs are covered, room costs are covered. Now, take an example. Usually this claim is for an inpatient client, which means a hospital admission is mandatory for almost all health insurance policies, right? Once there is an admission, then some of them cover, let's say there is an operation that is there, some of them will cover only the operation charges, some of them will cover the charges around the room cost if you want to stay there for a while. Some of them, so treatment and room are typically covered. Some policies may cover consultation fee and medicine around that as well, right? So in case you want second opinions, third opinions, typically these policies are available for inpatient clients. You would rarely find medical insurance policies that would cover outpatient department. What do we mean by outpatient department? Suppose I have fever and I go to a doctor, that is not covered under medical insurance. Only if I get admitted because of something, the charges of admission to the hospital are typically what get covered by health insurance. Since these charges are big these days, and that could be a big dent in terms of the overall financials of a person, it might make sense for everyone to have a medical or health insurance with them, right? Now, pre-existing illnesses may be excluded from cover for a fixed period when insurance is being taken for the first time or if it is being renewed after a lapse. Let's say someone already has a back or spinal problem, right? And let's say someone has that and this person knows that there is going to be an operation at some point of time. This person might now go and take a policy so that he doesn't have to pay. Now that's not accidental. Remember, insurance, the first clause was that it has to be accidental. You can't plan the event. So you can't plan that there is going to be an operation, so I will probably take an insurance. So if there is a back or spinal problem, most likely for a back or spinal operation or any admission that's happening on that account in the hospital, you will not get the claim honored by the insurance firm. So usually this period could be 1 year, 2 year, depending on policies. But for most policies, the first year you cannot get directly into a condition that is pre-existing. In fact, when the medical or health insurance policies tend to evaluate whether a condition has been pre-existing or not, when they are trying to settle a claim, they will try and assess if a condition has been pre-existing or not. If there is any record to prove that there is a pre-existing condition which you have not told them clearly, then they will not honor the claim in that case. There is also a tax benefit that comes, about which we will discuss more when we move towards Unit 5 in the context of wealth management, when we look at the capital gains and taxation benefits that are available. But the government provides an income tax benefit of up to rupees 15,000 if you pay for a premium. This is deductible from your taxable income. Deductible from taxable income, right? In fact, health insurance for parents is also deductible. So to that extent, the government gives you benefits around health insurance. It's an important insurance to have. Uh, Tomorrow, when you do advise someone as a wealth advisor, it becomes important for you to ensure that everyone has a medical or health insurance with them, right? The next one is a more simple one, which is a vehicle insurance. We have seen this around us. Now, basically, what is the need of vehicle insurance? Remember, insurance of motor vehicles against damage, your motor vehicle against damage, is not compulsory. But insurance of third party liability arising out of the use of motor vehicle in public places is compulsory. No motor vehicle can be used in public place without such an insurance. Why? If someone So any kind of third party liability arising in the public places when you're using a motor vehicle on a road is compulsory. The insurance there is compulsory. Why? Is because someone uses a vehicle and then you go and hit it to another car. The damage to your car may not be insured, that's fine, but the damage to the other car, and if there is any kind of property or bodily injury to the person or death of the person on the other end, that is what has to be covered. And that's why vehicle insurance becomes a necessity or becomes mandatory for you to take. What is mandatory is the third party liability arising, not your vehicle, essentially. People then combine both of them and take both of them. So basically, the company indemnifies the insured in the event of accident caused by the use of the motor vehicle. The sums include the claimant's cost and expenses, which the insured shall become legally liable to pay in respect of death or bodily injury to any person, damage to the property other than the property belonging to the insured, or held in trust or custody or control of the insured, right? So if there's any damage to any other property, that can basically include in the insurance. In this context, it is also now important for us to revisit our term of the no claim bonus. So if you have a vehicle, but you have not used the insurance for 2 years, as in you insure it, but you have not really availed of the insurance benefits, then because you have basically paid money to the company but not really used it, there is an advantage that you are given the third time you go to the company, right? This advantage comes in the form of no claim bonus, which basically reduces your premium. It can reduce your premium when you look at the no claim bonus that comes along with the policy, right? So that's basically how a vehicle insurance works. That's how broadly the general insurance policies work. There are a host of other general insurance policies as well which are available, and now we look at those which come non-life insurance policies which can be created for a variety of other assets or other events, right? So there could be something that is only against a critical illness, right? So such as cancer, heart attack, stroke, kidney failure, right? So these are some of the critical illnesses where you could get a lump sum benefit to be paid in the event of certain specified diseases such as these. That's an extension to a medical policy, but typically this is also available, if you remember, as a rider to life insurance policies. You could use this as a rider to life insurance policies as well. The next one that comes is travel insurance. When you're booking a flight ticket, for example, there is an availability of a travel insurance in domestic movement. If you are going outside the country, if it is a foreign travel, then typically it is mandatory in some countries to be there with medical insurance. Otherwise, costs are huge, right? If something goes wrong there. So travel insurance provides medical, financial, and other assistance in the case of domestic and international travel. Very important in the international travel context, because some countries do not allow you to enter without an insurance. In some other countries, the cost of healthcare is so high that if you do not have an insurance, that could be a big problem if something goes wrong, even on a vacation, right? Then you have property insurance. India is a country where a lot of people have huge real estate investments, and people save their entire life's worth and go and buy a home with it. Property insurance provides protection against most risks to properties such as fire, theft, etc. This could also be for shops that people have or showrooms that people have. Damages through act of God is also part of property insurance. Some of the policies will allow you to claim against floods, earthquakes, etc. These are also kind of covered under property insurance. It's important to have this as well, because most individuals in India have a lot of their net worth coming primarily from a property investment, right? And then there could be some sort of a liability insurance, which is the purpose of this liability insurance is to provide indemnity in respect to damages payable to third parties or damage to their property. So if you have any kind of claim that comes to you, vehicle insurance is in a sense a liability insurance. So if there is any kind of claim coming to you, you could have a liability arising out of that, and you could take an insurance based on that. Correct?
And so those are the major kinds of other insurance policies which are available. You'll see a lot of other interesting kind of general insurances coming up as well. For example, when you have IPL in India, the Board of Control of Cricket in India kind of has a sort of a insurance cover over the entire IPL event. If something goes wrong and the event is cancelled, then for the damages, there's a liability that arises out of it. For that, you could have an insurance cover, for example. All events that are organized by, let's say, musicians are covered under some kind of insurance around that. So these are typically all the major kinds of non-life insurance products that are available to us. So that broadly brings us to an end of this particular section as well. Now, what we are going to look at is a couple of quick questions. Just explain briefly how a medical insurance works and also tell us why is vehicle insurance mandatory. Thank you.